What is going on today, YouTube? Today, I want to talk about the crazy day in the market we had. I had a couple other videos I wanted to get out before this one, but I just had to make a video after watching the market and everything that happened today. As you can see, we had roughly a 3% drop on just one of the indexes that I follow. If you go to the S&P, I'll show you. It's about roughly the same. I'm just in a lower cost index fund, but it replicates the S&P. But we'll go back just real quick. We'll go back. This did happen earlier this year, about the beginning of February. The stock market went on a big crash, or a small crash, because it did recover within the year now. But as you can see, it's crashing again. It's doing the same exact thing it did the end of February or beginning of February. So if you guys are new to my channel, I make investing videos. Teach you guys stuff I'm learning along the way. Teach you guys I wish I knew when I first started, and try to get you guys to stay out of the traps that I fell into when I first started in my investing journey. Now I'm still learning. I still follow a lot of the advice from Benjamin Graham, Warren Buffett, even Tony Robbins. Tony Robbins has a great book that shows you about investing in index fund and just riding out the waves. So if you like this kind of content, subscribe to my channel. If you like the video, leave a like on the video. It shows me you guys are enjoying the content I'm making. And leave a comment below if you have any questions or want a certain type of future video. Now, as you can see, we'll pull up the news really quick. Equities plunge with the S&P posting worst day since February. Dow skids 800 points. 3% loss, a little over 3% loss in 1 day period. Now, if you look back in the beginning of February, it did about the same thing. 3.3% drop in 1 day. Now, this is just to show you how fast the stock market can change. How fast it can go down, and it typically goes down a lot faster than it goes up. Look back to here. We'll say you can look up top, a 10, 11 day frame. Stock market crashed 10%, right? Just under 10%. Now, the same exact thing could happen right now. But the point I wanted to get across, since we can look at the past, we don't know what's going to happen in the future. It could keep on going down. It could just rebound tomorrow. But it took roughly 10 days to drop 10%. So, roughly percent a day. Now look how long it took to recover. To get back that 10%, we're looking at a time frame out around here. 193 days to recover. Stuff goes down a lot faster than it goes up. That's why the great investors out there say, you better be investing for the long term and not worry about the day-to-day fluctuations. You could see this, you could panic and think, oh, I got to get out, even if you're taking a loss, and then you're going to get back in when it goes back up to where you were if you just would have kept on holding. Now, don't take that set in stone because no one knows what's going to happen in the future. But for instance, we'll use this as an example. February this year, beginning of February. If you decided, oh, I'm going to quit, I'm going to get out once it loses 10%, and then you decide later on, you waited, you're like, wow, it's back to where it was when I originally started investing. I'm going to get back in. Say you got back in the end of August, or right around August. You got back in, it went up a little bit more, went up about 3%, and then it dropped way back down. And you decide, oh, I'm going to get out again. So that's a continuous cycle of losing money. When you get in at the top, get out at the bottom. Get in at the top, get out at the bottom. It brings on a cycle of losing money. That's why, number one rule, invest with money you don't need. Number two, stay in for the long term. Now, I know it sucks. I'm pretty down today after watching what happened. I mean, it took me... Overall, I was about 10% up on my investments that I started back in 2015. Today, because I've been buying at a steady pace, so I've been buying when it's cost more and more and more, I am down to about a 4% gain. That's a big loss. I mean, it hurts to see. But I'm going to stay in for the long term and see what happens. I trust these people before, but it really does suck. It makes me start to think, hey, maybe I can invest my money better elsewhere. Because I'm even thinking longer term right now. I'm thinking, well, what happens if, say, all my money was in here and I'm ready to retire next week? All of a sudden, this market crashes and I lose 3% of my money, 3% of my retirement money? That doesn't sound too much like something I want to do. It sounds like maybe I should start looking towards other investments. But another thing is, too, these are stocks. We're going to look at the index fund. This is an index fund of stocks. We're going to go in and we're going to go into bonds. Usually bonds, when they drop, yes, I guess it did drop like the market did today, but if you look today, it lost 0.08% today. Now, if you look back at the index fund, it lost 3.18%. So that's why even Buffett says if you're close to retirement age, you want to be in safer investments. So he's going to have the majority of his money in bonds if he's closer to retiring than he is stocks. A 0.08% loss is a lot better than a 3.18% loss in one day. That's 3%. 3% difference. Just in a day. So if you're, depending on where you are in your investing career, you might really want to consider, bonds went down, but not nearly as much as stocks went down. And usually, I'm not going to say this happens all the time, because there's always outliers. Year-day chart. Bonds have been going. This is total bond market ETF, Vanguard's. But bonds have gone down this entire year because, yes, the stock market has gone up, so the stock index has gone up. We're going to look at a farther time frame. Don't want to look at MAC. We're going to look at 20-year month chart. 20-year month chart. Everyone, I'm sure, knows. Stock market crashed in 2008. Look what happened on the bond market. Yes, it went down off the initial crash of the stock market, but it did go up. That's when bonds typically go up. So, stock market crashes, bonds go up. It doesn't happen all in sequence, like one goes down, one goes up, but it's a safer investment. Look at these returns. You're not really returning much at all from 2008 to 2018. Now we're going to look at a stock index on the other, 2008 to 2018. Yes, you have a lot more gains. You about 3 times your money. But if you're near the end of your investing career, maybe you want to be more into bonds than to stocks. And this is completely up to the individual. Whatever suits you, your risk tolerance, it all comes into play. But I just want to show what happens to bonds when it happens to stocks. 2008, 2018. This is what this shows. And 2008 to 2018. A total bond market exchange traded fund, and a total stock market exchange traded fund. There's a big difference. But if you're in the last couple years of your investing and you just want to let your money go and hopefully it goes up a little tiny bit, but you're not going to take a substantial loss, maybe you're better off being in bonds. Should really talk to a professional out there, a professional that takes care of your retirement savings. Ask what is the best case scenario for you at this time. But anyways, go back to the stock market. All right, so what's going on in the stock market? There's a lot of uncertainty in the world right now. When there's uncertainty, stock markets fall. There's also a big tech sell-off. We can look at stuff like Amazon, one of the biggest tech stocks out there today. We'll pull up a 6-month day chart. Amazon today lost over 6%. That's why it's safer to be diversified in like an index fund if you're not just into a solo stock, because you lost 3% rather than 6%. Again, that's another thing for risk, reward, risk tolerance. It all comes into play. But to look at a 3-year chart of Amazon, this thing is going up like a straight line. All these tech stocks are going crazy lately. Amazon is leading the pack, but you've had substantial gains since 2016 investing in Amazon. You've just about doubled your money, or did, until this recent crash where you're a little over double, like 1xing your money rather than 2xing. But is this the end? Is this the end of the long bull run that we've had for the past 10 years? No one knows. You can tune into CNN for 2 seconds and see One guy's pro for this is going to be a little correction, and the stock market's going to continue to rise for years and years to come. And on the other hand, all these technical readers out there are saying, oh, it broke a key level. If you look at the SPX, they're saying it broke a key level. And their key level that I read in an article was the 2,800 mark. Broke the 2,800 mark, so now we're on a downtrend. But guess what? No one knows. It's just a guess. And when we're done at the end of the day, whatever happens tomorrow, the rest of the year, the rest of this week, the rest of this year, there is going to be one guy that's right, because you have a spokesperson going every single different direction. And if one person says it's going up, one person says it's going down, and one person says it's going to stay the same, one of those three is going to be right. And then you will only hear about the guy that was right. You won't hear about these guys that were wrong. So that's it for the video, guys. I hope you enjoyed, and if you did, leave a like on the video, leave a comment below if you got any questions, and subscribe to my channel if you like this kind of content. We are going to continue to watch this stock market and see how it will keep on trending for the rest of the week. It's been an exciting week so far, and we'll see how it goes. I will see you guys in the next video.